OK, it's time now to catch up with the latest business news and a move by China to cut tariffs on US imports. To tell us more about that, our business editor Stephen Carl is here with all the details. Stephen.
Eve, this announcement is coming just weeks after the United States and China agreed their Phase 1 trade deal. That's aimed at diffusing the trade war between the world's two largest economies. A cut in tariffs on the Chinese side wasn't explicitly included in the deal. But China had committed to buying $200 billion more of American goods and services over the next 2 years. Separately, the government-controlled Global Times newspaper says that Beijing is considering invoking the disaster provision in the deal because of the coronavirus epidemic. That could allow China to renegotiate some of its commitments. Lauren Berstecker has the details.
De-escalating its trade war with Washington, China said it will have tariffs on hundreds of U.S. goods by February 14th. The move will affect 1,717 products worth around $75 billion. It will see existing tariffs halved to 5 or 2.5%. The announcement comes 3 weeks after the two countries signed a Phase 1 trade agreement and reflects Beijing's commitment to boost its purchases of U.S. goods and services by $200 billion over 2 years. Washington, meanwhile, has pledged to halve its own tariffs on $120 billion worth of Chinese goods from 15% down to 7.5%. The tariff reduction also comes at a time where the Chinese economy is struggling to cope with the impact of the coronavirus. The epidemic has already seen several major companies suspend or completely close operations in China. The outbreak has also affected consumer demand, making it even more difficult for the country to abide by its purchasing commitments. There were reports Thursday that Beijing was considering triggering a disaster clause included in the trade deal, which could allow it to renegotiate its engagements with Washington.
Well, news of that tariff cut going down well on the markets. Chinese shares getting a boost as a result. Shanghai up over 1% in trading. Earlier on, we'd had gains too on the Nikkei in Tokyo. That was on the back of strong economic data in the United States and hopes of containing the coronavirus outbreak as well. But strong gains across the board in Asian trading today. On the European markets, shares also starting the day in the green. Lots of company results driving the markets here in Europe, though. The oil company Total opening up 3% after their results. Sanofi and Publicis also starting the day up 2%, but the main indexes across London, Paris and Frankfurt all starting the day up. Now, one of those sectors watching developments with the coronavirus epidemic is the oil industry, and the French oil giant Total announcing its results also has warned of a potentially significant reduction in demand for oil over the next 2 months of up to 1 million barrels a day. Meanwhile, the cartel of oil-producing countries, OPEC, is continuing their meeting in Vienna for a third day today as they discuss how to adapt to the drop in demand from China. Now, that's meant for oil prices a big slump in recent weeks, but we are seeing some stabilisation in prices today. If we think about the Brent crude, which is the international benchmark for oil prices, it was over $68 a barrel a month ago. Today, it's $56 a barrel, a similar trajectory for WTI, but as I say, some stabilisation in trading today. Shares, meanwhile, in the electric car maker Tesla have plunged after it revealed how it's been affected by the factory shutdowns as a result of the coronavirus in China. The company has delayed delivery of some of its Model 3 cars to customers that were set for this month. Tesla says it's planning for production to restart at its Shanghai plant on the 10th of February. The share price was down 17% on Wall Street on Wednesday. That's after it skyrocketed earlier in the week. Argentina's Senate has approved a bill giving the government new powers to restructure the country's massive debt. President Alberto Fernandez is trying to make Argentina's $335 billion debt mountain more manageable through talks with its creditors. That includes $57 billion that were borrowed from the International Monetary Fund. Argentina's finance minister telling a conference in the Vatican this week that the country could not continue servicing debt that was unsustainable. And finally, for me, the engagement ring that's perfect for pizza lovers. Domino's Pizza in Australia has unveiled a specially designed ring that it's offering as a prize for the best proposal idea involving pizza. It's It's a tiny diamond-studded pizza slice and a ring. It's worth apparently over €5,000. The chain says it would make for a truly domantic proposal, although perhaps, Eve, a bit too cheesy for some.
Yeah, I think it just might be. You could always melt it down, though, couldn't you? Stephen Carroll,
Don't
thanks.
eat the ring.
Don't eat the ring. Good advice there from our business editor, Stephen Carroll. Thanks a lot for that update.